Hey, what's going on, everybody? Today we're going to talk about Jumia once again. It is time. We haven't talked about Jumia in a while, but today I think the technical levels support a very good entry point, and the macro conditions across the board are looking like a very strong bounce recovery going into the end of July. We thought there were going to be some chop in July. Chop did indeed happen, so if it happens early, then we have to get over it and go ahead and buy these dips. The VIX is way up there doing the thing on top, so you got to buy. You got to be risk on. Hey, look, boys, girls, when the VIX is sky high, you got to be risk on, meaning you got to buy the dips. You got to buy the dips unless macro conditions change. So there was a bunch of out of ecosystem news today. And so if you're new to this channel, Redcliffe Research is an independent research firm who deals a lot in signal detection, anomaly detection. So we have a lot of data analytics background. A lot of our data scientists from other companies volunteer and play around in this company. But one of the things that we do look at, right, is anomaly detection. But more than that, when we are sorting out news and stuff like that, a Bazinga article is not going to be as important as an article that's what we call out of ecosystem. That's because we have those articles weighted differently. So have some out of ecosystem news. Well, so without further ado, also if you're new to this channel, everything is done in one take. So if I'm sitting here pausing, that's because I'm drinking my favorite beverage or I'm generally actually thinking. So let's get into it. This is the chart. Previously, we had a bunch of support resistance line drawn up, but right now, all we're looking at is 24. And 24 is a key factor for us. We're looking at the RSIs dropping almost back down to 30, so looking like a really good time for a bounce. And I say that because, like unlike over here where we're just kind of struggling to stay in place, we did get a kind of a surge towards the top, a little bit of a bounce down, a little bit of a surge. So there's price action here is what I'm saying. There's actual volatility instead of a pronounced kind of like downslide here, as you could see with this kind of RSI indicator. I don't typically use the RSIs, and if you watch this video or if you watch this channel for any amount of time, that I've never even talked about the RSI. But again, when there's certain signals, certain things work, they work. We always talk about that in abundance. Thing is, obviously, there's a lot of pressure here from all the SMAs, and so that's something to be a little bit concerned about. But if there's ever a support that's going to hold, it's going to be 25. We've touched it once, twice, 3 times. 4, 5, 6 basically, and this is the 7th time we've touched it. And so one of the things that we talk about here at Redcliffe Research is horizontal channels are the most consistent and the most honest channels. And I would say this horizontal channel represents something between 24 and 33, looking for the next breakout over 33, right? And so, this is kind of just palm reading. Just realize that obviously this is palm reading. Nobody can actually predict the future, but if you can get better than 50%, and hell, even if you don't do as good at 50%, as long as your R1 to R2 values, risk to reward in your trade is good, asymmetric, if you will, you'll be just fine. That said, Jumia is exclusively in our long-term no-look portfolio. We don't typically trade it, but we do look for good entry points to add. We are completely full on Jumia, so I'm not actually shopping for Jumia, but I would say that $24 is a very good price, and you could load up or add more. If I was going to buy a little bit more, this would be a good time to do it, but my portfolio is generally full on Jumia at this point. That said, as you can see, the volume is definitely not trailing off, but pretty consistent. So whether it's moving up or down, it's not much of a crowded trade. It's just a trade at this point. We are not seeing any kind of fluctuations that would kind of promote interest, and sentiment is also kind of the same. We've kind of scraped for sentiment. It is what it is. But this is fine because it's our long-term play. That's why it's fine. And again, we have a huge time horizon on this. This is us trying to buy. I don't want to say the next Amazon or anything like that, but essentially we're trying to buy something with very asymmetric upside returns that will be a very long-term play. So just buying and holding for these, and if we see opportunities like this, we might add a little bit. But if you're full, you're full, and we are a little bit full here. So what's the DeMark indicator saying? Well, the DeMark indicator is generally kind of wonky or kind of off on this, but so if you don't know what the DeMark indicator is, it does a really good job sometimes, depending on the stock, depending on the time frame, etc. But it tries to measure trend exhaustion through algorithmically significant sentiment decay. I don't want to speak for them, but essentially that's what I see it as. Okay, that's how I use it. So anyways, it did call a lot of tops and bottoms very significantly. When it comes to the broader markets, it works really good for the S&P, for instance. But right now, nines are intermediate exhaustion, 13s are extreme exhaustion. We have a bunch of nines printing. This nine would have said down, kind of worked. This 13 is extreme exhaustion, didn't really work. So this discount that. That's why this TDST line printed. Okay, I won't go too much into that. Here's what you need to know. This 9 printed the 13 on the bottom. We did get a push up, but not very much. Then we printed extreme exhaustion down here, and we did call this in the chat buying at, I want to say that it got all the way down to 18, right? And we called it out, and we had a huge, massive move that same day, like 40%, way back up to 24 or something, 25, I think. That said, another move up, and then this 9 printed correctly, went back down. This 9 printed correctly, and now starting to peel, right? We're on day 6 of that peel. So there could be a day 7, 8, or 9, but it doesn't have to be, right? So if the trend stays consistent, it would print down, and then we'll get another nice buying opportunity at around, I would say, probably 20, right? Or here it is, the magic number 18. That said, I do feel like this 24 floor is very strong. Again, the way you have to look at this, and if you're new to technical analysis, when you're looking at floors and you're saying, hey, why is 24 a significant level and 22 previously? Well, 22 is previously our intrinsic value line where we thought Jumia was actually worse based on our type of modeling. It's really hard to model companies that are not profitable, but based on some sensible modeling and consensus data, you could generally say 22 was a decent kind of intrinsic value line. That said, 24 is a little bit slightly over. That's fine to be trading a little bit rich, but the idea here is, think of this as people in line. So people in line, people have a historic kind of memory, if you will, right? An institutional memory to buy at 24. Like, that's a safe place to buy. So because of that, and it's happened so many times, when you see people get in line, getting ready to go buy that Apple phone, you got to get in line to buy it too, right? So it's just really just market market sentiment. Okay, so here's some interesting news. So there's Africa's e-commerce gender gap is costing billions of dollars. Now, this is interesting, not because of the ESG element or anything like that, but watch this. The bottom line is actually quite incredible if you look at it. So Africa e-commerce market could benefit by around $14.5 billion if the number of women selling on an online platform achieves parity with men, so equal to men, according to the new report in International Finance Corporation. Here's the interesting thing. This is an article published June 17th. Remember, we said $14.5 billion, right? Extra. So $14.5 billion on top of whatever it is we're doing now. But look at Jumia market cap. This is what you got to really, really think about with Jumia. It's only a $2.52 billion market cap company, right? Very, very small. Could you imagine an inflow of, well, I understand that 14 billion of it's not going to all go to Jumia, but even if they capture half of that and capture 7 billion, what does that do to the stock price, right? That 3x is the stock price essentially, right? So just think of it like that. Very, very optimistic. So if this can go, it can do a lot. So e-commerce in Africa is thriving according to the article, yet we are already seeing widening gender gaps in the sector. Targeted support initiatives for women are crucial to dealing with the inequality, Jumia says, and Jumia is actually talking about this. It's absolutely essential for women to be factored in to future e-commerce. So, this is talking about Africa's digital journey, but yes, the digital journey needs to happen. All these things need to happen. Parity with men needs to happen in Africa. And should all that happen, Jumia should definitely be rewarded for being one of the first to be in Africa. Okay, so just to kind of get an idea of what could happen. So this is Asana. So Asana is like a kind of workflow management system. It's kind of like Slack, but with more of an agile framework. It has Kanban boards and all kinds of other stuff, kind of like Notion, more like Notion really, if you're familiar with that. But I'm not here to talk about that because of that, but I'm just here to talk about the 9.9 billion market cap. But I would just say, and I would offer in December of 2020, not very long ago, right? Asana was trading at about 3 billion market cap, so pretty close to where Jumia is. And so, even just to get to 9 billion, look at just the surge up here, and it can happen. The beta is similar. In fact, the beta is not even showing here, but let's just say the volatility here, this is actually got to be incorrect, right? 5.96, there's no way that's correct. But anyways, performance per quarter, 102%, and for the half, 134% gain. So definitely could see that even going to the back end of Jumia. Don't put it past it. And the reason why? Why? Because, it's a 3 billion market cap company. To get to 9, it has to triple, right? So just understand that if you're new to the stock market, new to how price action works, new to thinking about how high a stock can go, these are the stocks where when you're speculating, when you're right, and if you are right, you can be highly rewarded. So, I don't want to be just all bulls and not think about anything bearish. When I do find a bearish article, I do want to kind of talk about it. So, SokaWatch bets business to business e-commerce can beat Jumia's retail in Africa. This is by David Westhouse. But basically, this East African e-commerce company plans to expand to West Africa. Not the entire thing. Remember, Jumia has 11 out of 54 African countries, right? So I think Jumia is sitting on 11 out of 54 African countries, and that's sitting at 70% of the GDP of Africa, right? Last I checked. So they're capturing most of the market with that 11 countries. So West Africa doesn't have, remember, all the big players like Egypt, et cetera, right? So not, a kind of big kind of concern for us, but it is saying that there are going to be competitors. But I mean, just looking at this picture, I guess the Jumia tuk-tuks are not demonstratively better looking or anything like that. But I'm just saying that, the competition is there, and this is what it looks like, is all I'm saying. I'm saying this just to give you a sense of, hey, this is something that you might want to look at, and there is competition, but it's mild at this point. So, Africa online retailer targets investments in Egypt. So remember, $3 billion market cap company, 590 million into Egypt and other countries starting this year. So that's a large piece of the budget. Remember, they did do an equity raise last year, then raised 500 mil. So with that 500 mil, this looks like 500 of it was straight up going to this, and the other 90 mil they got to come up with from revenues or whatever like that. But they're losing money, so it's got to come from somewhere. So if you're wondering where your money went to when they did that raise, this looks like the obvious place, because remember, indeed, they raised 500 million. So this looks like the obvious place that's getting targeted. Looking at growth. So they did something with the money. So this makes sense. So if you're a shareholder and you're saying, oh my God, Jumia diluted earlier this year, and you're wondering where it went, this is where it went. Obvious. It's great. No worries. This is what you want them to do. You don't want to be like, where's that 590 million, right? No, not only is it 500 million, 90 million. So if they would have raised 700 million, you would have been like, oh, okay, that's still fair. And they have some free cash flow, some runway. This is even more fair because they're only taking 500 of that to do that. Jumia Egypt will increase its total number of pickup stations to 200 this July and increase the last mile delivery stations by 40%. That's huge. Other plans include increasing its warehouse and delivery capacity to improve its next day delivery service. So getting that next day flavor over in Africa, I think that's really important to bring that kind of addictive behavior, if you will, right? Gives you more delayed gratification, or more instant gratification, rather. So here's a big, interesting article, because Jumia's payments unit now is 1/3 of the marketplace in revenue. So I saw this article in two different places. It was in Bloomberg and in Payments, PYMNTS. So I brought up this one. But Jumia Technologies in Africa is looking to build an e-commerce business while adding momentum to its payments division, which accounts for 1/3 of its overall business, according to Bloomberg article. I don't think we at Jumia are interested in size. That's good for ego, but it's not really useful, said co-founder Jeremy Hodara, told Bloomberg. I think that we care about is to last very long as a successful business and to be here for 100 years. So thinking very, very big. And, if you ever listen to what Jeff Bezos said about Sony, when Sony was like coming up, he basically said like, the modeling of Amazon over that big kind of idea, right? So Sony was like, not only that we're going to be the best, we're going to be the best in the world, like literally dominate the world in quality. And you're talking about a country back then that wasn't known for that type of quality. Likewise, Amazon, when he built his mission statement, it was massive. I can't think of it verbatim today, but basically his idea was like even more infinitely bigger, right? So here, again, just big goals. But I think that's the right way to think about it, right? So if you're going to build a Jumia, you don't want to be like, hey, we're just going to do this payment processing and just try to sell out to the next, whatever. If you're a shareholder, you want these guys, Jumia, to grow, and you want them to become what Marcus would say, that diamond, right? You don't want somebody to just take that diamond, put it in their pocket, put it in their house, and just never be seen by anybody else. But the Jumia Pay app in 2016 is now used to pay for more than 50% of sales on the platform. There's no immediate plan to work as a spin-off or the payments division, Hodara said. It's not out of the question in the future, though. So if you're wondering what that looks like, this is the Q4 earnings call. This is showing the breakdown. I really just brought this up, not so much to show countries or anything like that, but there's 4 million downloads. It's definitely a start. But what's interesting is the breadth, right? It is literally everything. I mean, and they have it sorted by vouchers, finance, TV, internet, utilities, airtime, travel, and lifestyle. Point is, people are using it to pay for everything. And that's big because when you see this, you see, what do I see? Well, I see that the fact that if I'm buying stuff, if I've done this once already, or I've done this another time, I'm going to keep doing it. It's that switching penalty, that switching cost that you off to the consumer, meaning you keep them there with you longer because it's so hard for them to switch. If I'm generally used to using Jumia Pay, I keep using Jumia Pay. So we definitely like that. We want to see that. Okay, so this is Africa's Amazon targets 100 years of e-commerce leadership. We just talked about that. But the thing that I wanted to kind of bring into light here is, according to this article by Bloomberg, it has no capital raising plans for now. And this can change. Obviously, they didn't really have any before. But like the idea is, the shareholders got diluted. The 500 million was raised, and they used it. So no worries, no issues there. Okay, this is a Simply Wall Street article, I believe. But anyway, it says Jumia Technology saw its revenue shrink by 13%. We're okay with that. We understand what they're doing. They're trying to conceptually change the direction and looking for what we would call back here, what I wanted to talk about is product market fit, right? So the idea here is 1/3 of the market's place revenue is now transitioned to payments. That's huge and that's massive. But the idea is when you create a company at first, you don't know exactly what the customer wants. You don't know exactly how the customer is going to perceive your product. But as you iterate, as you develop your products, as you develop your business, you'll better know what verticals you play in best. You'll better know where the sharks are, and you'll better know where you can most get your food. And that's what product market fit essentially is, not being too early or not being too late to the party. I think Jumia is doing a good job of kind of balancing that. And I do have enough confidence in the leadership to think that not only are they in the right place at the right time, but it's emerging. So a little early, but I think it's right. It's right because if you're not this early, then somebody else kind of takes the seat. And so I think they definitely have a say-so in how this develops, e-commerce in Africa, at the very bare minimum. And I do think that they have a very good chance to dominate. Okay, the reason why I brought this up, though, is this is in stark contrast to the Splendorous stock price, which has rocketed 398%. Since this time a year ago, it's pretty clear the market isn't basing its valuations on fundamental metrics like revenue. Yes, even the dean of financial valuations, Oswald the Modern. I was watching YouTube video. He was getting interviewed by CNBC, but he was even saying that the old discount cash flows are quite lazy, and that's true because it's just one real simple input in a very hyper wickedly complex problem set. And so the way you should think of it is, where, and the way we think of it at Radcliffe Research is, where is that inefficiency in the market when it comes to valuing a company, and how far out is it, number one, but what does that actual curve look like, and where is it most optimal to be speculating? And I think Jumia is one of those companies, one of those stocks where if I plotted it out for you on a graph, temporally, timeline wise, you would say that, hey, this is a really good time to invest in a company like this because the speculation, the risk versus reward is hyper inefficient. And so people are arguing whether this is worth nothing or a lot. And that's why volatility looks like this for stocks like this. But that's totally fine as long as volatility is going generally up. That's important. So it wouldn't be a video from Radcliffe Research if it wasn't with some data involved. But this is just showing sentiment heat map over the last couple of days from July 2nd to July 8th. I really bring this up because, instead of scatter plotting it and not getting very much out of it, but, it's generally happy or relaxed. That's the green bars, right? And this is Jumia, the stock. So money sign JMIA. It's literally people searching for the stock. And even that, right? Even that categorically is not very bearish. There's nobody just screaming that Jumia sucks or anything like that. Very rarely. It's mostly, well, I don't want to say shills, but mostly people who are kind of emphatic about Jumia, obviously. And if you kind of scroll through the kind of Twitterverse, you can kind of see that. But, obviously, we have some volume coming in here based on that. July 2nd, pretty small, pretty mild. Now, this gap fill from July 6th to July 9th. More tweets coming in, so I don't know what that means yet. It's not statistically significant. In fact, there's only 40 tweets at the top right here, right? So this is about 33 tweets, which is the highest it's been all week, but it doesn't really mean much. It's not like a 2 sigma event or anything, but still something to definitely watch, something to definitely take a look at and consider if you're trying to trade these kind of things. These are the kind of things that we look at when we're trying to trade. Obviously, again, Jumia is a long-term hold for us. Just remember that. So it's in our no-look portfolio. We don't mess around with it. It's not in our trading portfolio. It's not in our high-risk risk-on YOLO portfolio as well. This is definitely a long-term trade. We don't even look at it, which is why when folks ask me, is now's a good time to enter Jumia? I don't know. I haven't done my due diligence, but nothing has changed, right? So no news is good news for Jumia. And typically, earnings is what talks to that, right? And that's when we can kind of course correct and kind of figure out if we want to trim our position, et cetera, et cetera. But from here, still looking very bullish, very optimistic. And I wanted to leave you with one other thing. This is our world in data. We always go to this. And too bad this is only 2016 because I know the new data suggests something completely different. But I just wanted to show you this because this is a very clean visualization. Again, I know this is way better, but you just got to remember in 1990, even if we take it from, say, 2000, I don't even want to go back to 1990, but even if we cut this cross-section off for 2000, this is showing relative to the rest of the world, how much internet is being used. So you got to remember, North America was using 80% of the world's internet back in 1990. So when we get to 2000, it's using about 38% of the world's internet. But then you can see, obviously, East Asia and Central Europe pretty straight, but East Asia definitely starts to grow, right? That whole Pacific Century, Korea, and then South Asia here as well. Here's the thing. Africa down here, and Sub-Saharan Africa, and then North Africa and Middle East, right? So just say these light blue and dark blue cross sections here. Look, you start at literally 0% at 2000. I'm not talking 1999, I'm talking 2000. And this is where, if you were betting on emerging markets, this was when you were definitely into China, right? And you're buying a lot of Chinese stocks or investing in companies who were investing in China. But now look at this. In 2015, we've already gotten to almost 20%. And we do know the growth rate for Africa proper, the continent itself. I know it's divided and super disparate, but, it is growing at a very aggressive rate, to say the least. So looking at already, nearly 10% in 2015. I don't know what the new estimates are, but I know that its trajectory looks something like this. All to say that we're probably at around 30%. And so by relative volume, internet users by world and region starting to really, really, really catch up. And so with the internet penetration, I really do think that there's going to be a very, very big move for e-commerce in Africa. And so, still very, very bullish. So, hey, if you're bullish with me, tell me why you're bullish. If you're bearish, tell me why you're bearish in the comments. I'd love to hear it, especially the bearish comments. I want to go back and forth with you. I know there's not like look, it's a speculative play, but you have to have some, right? If you don't have any speculative plays, then you're basically 75 years old and you're drawing retirement. But if you're like 60 or younger, you got to have some spec plays. So I respect that. And this is the one that we have. So if you watched all the way to the end, thanks for watching. If you like this kind of thing, you can subscribe to our macro newsletter that comes out every month. We didn't push one out this month because it was a Patreon only one, but this is the only month that we didn't push it out to everybody. That's because it was a huge deep dive by Marcus on the airline industry, and there wasn't a lot to kind of chop up. So wanted to keep that intact, and so we sent that out to the Patrons only. And so well, anyways, thanks for watching. What we have next is I think we got PayPal. Mark is going to talk to us about PayPal, do some DD on that. I'll be presenting his DD. We have transports. Tommy's digging into transports for us. We're going to talk about Baba again. Colby's going to come in real hard with some more esports, part 2. We're going to do the options video again. We got a lot lined up. We've got some long-term investing stuff going on. And I still think Angel is working on some of the AMD and semiconductor stocks videos. So got a lot of cool stuff coming up. I can't wait to get it out for you. If you're wondering where we've been in the lab. We've been digging deep, and we've been doing a lot of data analytics, and we're just making sure our shit works. Definitely don't want to present anything that we think is not good, and we want to make sure we're not missing anything. But that said, we wanted to put some Jumia news out here today because we haven't talked about Jumia in a while. So here it is. Hopefully you liked it. If you did, appreciate that you watched to the end and that you did like it. I'm not going to ask you to do anything because that's I'm not going to say it's beneath me or anything like that, but generally you know what to do. I feel like if people have watched YouTube enough that you know what you're supposed to do or not do for whatever. Spoiler alert, all these people talk about the algorithm have no idea what an algorithm is. They don't know how machine learning works. If you think you can let me think. Yeah, that's another discussion for another day, but it's generally why all right, well, thanks for watching. We'll see you later. Bye.